Hello, it's Charles Kelly again from Money Tips Podcast. Today I have a very special guest all the way from Beijing at the moment. His name is Emmanuel David. And hi, Emmanuel. Nice to see you.
Hi there. Yes, Charles. Good to meet you. I just practically landed in
Okay.
Beijing from Doha in Qatar.
Wow. Hope
So
you're
it's great to
okay.
get into this conversation with you. Yeah.
Great. So I'll just give a brief introduction about what you do. Emmanuel, basically, as a global influencer on the future of finance, Emmanuel is renowned for his ability to illuminate how finance has been transformed through a combination of geopolitics, cutting-edge technologies, and decentralized finance. Some of the work he covers are quite a wide range of topics: the future of the dollar as a reserve currency, BRICS, CBDCs, US embracing crypto, for instance, traditional banking and DEFI banking, APIs, lots of other things. We're going to have a really interesting conversation. Emmanuel is also the founder of a platform called TAB Global, which encompasses platforms like the Asian Banker, Wealth and Society, Banking Academy. These platforms have are instrumental in building connections within the financial industry, fostering collaboration and driving and innovation. I know you do lots of things like training and consultation as well. So
Right.
very interesting to meet you, and I hope we'll have a great conversation. So delighted to meet you, Emmanuel. So what in at the world at the moment in the world, we've got a lot of talk. Everything is about Trump at the moment, isn't it? In the news, it's Trump, Trump, Trump with the dollar, the gold, tariffs, tariffs on Europe. How do you see the world at the moment? Because it's quite a complicated world. We've got stock markets at record levels, gold at record levels, property in many countries at high points. How do you see the world at the moment?
Hey, Charles. The funny thing is that when I wrote my book, uh, and I had it published 2 years ago, I actually projected into how the U.S. will eventually influence the global financial architecture anyway, despite the fact that even at that time, all the talk was about the U.S. has a budget deficit. It is getting into, unmanageable debt and all of that, very negative. But I argued in my book that the U.S. was always like that, and there
True.
are no surprises in the way the U.S. functions, and that the U.S. Eventually dictates the global financial architecture at points of inflection which come about when it's desperate, when it's the least performing economy in the world because of structural problems that it's got, and also because the rest of the world has been rising and building sustainable economies. Everything that you can say wrong about China, it's now got a track record of from the year 2000 to now to 2025, that's 25 years worth of sustained growth. So they must be doing something right, and that sort of thing. So then we think that, therefore the U.S. is in decline. But the U.S. always comes back,
Yes.
and dictates the next phase of what the global architecture will look like. And that's what you're doing again right now. And the interesting thing about my book is the foreword was written by Barney Frank, who was a congressman in his time, a Democratic Party congressman. And because of Barney, and I know him personally as a friend and all that, I understood a lot about how the Democratic Party was being run, the issues that it had. So when Trump came into power, for all the things that you can say wrong about Trump, in the way he speaks and the way in which he predicates his strategies and stuff, he did show up the weakness of the incumbent Democratic Party structure very, very clearly. It had become incredibly ossified. It was an oligarchy of itself, stuff like that. And I think that the American people wanted change very badly, except that when the change came, it didn't come in a way that is packaged in the nice way that we all like to think of. Yeah, this is the right thing for the world to do. And so when I listen to everything that's going on, when I watch everything that's going on with the way in which Trump is handling, so many things all at once, right? It's geopolitics, it's financial structures, it's social strategies, and all that. I always look for the substance of what he's doing rather than the rhetoric. And the rhetoric sometimes, it distracts us from the substance. And right now, there are a number of good things that are coming about. I just came from Qatar, where a country like Qatar or Dubai, both come across as Muslim majority, conservative, and all of that. But the substance of their negotiations with the U.S. There's a huge U.S. Naval base in Qatar. At the same time, it was also the home of Hamas. How did that happen? That kind of thing. And there are negotiations with the Trump administration to find a lasting solution there. So we have to go back into the substance of the negotiations that are underway. Sometimes we're not even party to it. I mean, you don't see it in the newspapers, and you need to get it from sometimes from people and sometimes from people who talk in various podcasts and stuff, and the little things that they talk about. So today, I'm asked a lot about BRICS, about crypto as part of a national strategy, even in the US. Um, and when I look at a lot of the rhetoric that is out there, they don't go back into the first principles of how these things are run and how they're managed and how they operate. If you understood the first principles, then you'll see, how they will project themselves out. So, for example, my position on BRICS is that it's actually a gathering of thieves. Countries that fundamentally don't actually trust each other, but they're brought together because they have a common enemy, which is the U.S. Not enemy in that sense, but they want to find an alternative universe where they have a say, they have a ownership, and they have due process by which they can run their economies, make deals with each other without the U.S.
Without the dollar.
Pondering
Yeah.
on them.
Yeah.
So there's the desire for an alternative, but that desire is predicated by the relationship between these countries. China and India, for example, have a number of issues that they haven't sorted out yet. One of which is the border issue, which is being sorted out at the moment. But until it's done, there are no direct flights between China and India. I mean, they might have started it in the last 2 weeks or so, but the last time I checked, they don't have that. And then when you look at the cross-border deals that are taking place between China and Saudi Arabia, for example, it's not that they've abandoned the dollar as a transacting currency. It's just that they do so much trade with each other that they're able to give each other a swap line against the trade. So if Saudi Arabia sells $180 billion worth of oil to China and buys $120 billion worth of something, they just give each other the swap lines, and then they clear in each other's currencies. Without having to leave their respective economies.
Right.
And the Saudi rial is actually predicated on the dollar. So and Trump and Putin himself came out to say after the Kazan conference, the BRIC conference, that no, there is no plan for an alternative global currency to the US dollar. They're not thinking of, and then the Indian Prime Minister Modi also came up to say that there are no plans for a BRIC currency, for example, and that catches people off surprise, thinking that, oh, we thought there was going to be one. There were a lot of discussions and proposals out there at the Kazan conference. There was a consulting company from Russia that had its entire white white paper on an alternative currency to the dollar, but it wasn't part of the formal discussions. And on the formal level, it was about countries that essentially didn't trust each other's treasury and financial strategies, and one of the countries had to provide a baseline reserve currency for there to be an alternative currency to the dollar. So we go back to first principles then and then project out how this will play out. If anything, what Trump is offering a lot of the countries that have issues with the U.S. is let's talk. Let's figure out a deal that we can make and something that will work for you and for me. And that's something that the U.S. hadn't been doing up to this point. Now he's using trade as the basis of that conversation, and the fact that the U.S. is a negative trade balance with just about every country in the world. And it uses that to its advantage to say, you know what, we're not just going to buy from you, we're going to set conditions and trade-offs in order to be able to deal with you. And none of this is actually unusual. So we shouldn't take that as meaning that the U.S. is a bad country, or that other countries are trying to get a good deal out of the U.S. and all of that. It's what countries can do to get a better position for themselves. And on that front, the U.S. is no different from any other country. So I put this all together and then look at how wealth is being generated for today and into the future. We just talked just before we started this podcast that there are new property markets mushrooming in different parts of the world that didn't have a property market.
Yes.
So if you take the Middle East, for example, from zero, Dubai and UAE as a whole has become a very viable, sustainable property market in its own right. I never thought I'd see that happen. I've had an office in Dubai since about 2004 or something, and in that time, a foreigner couldn't buy property, and then the property market, blossomed for a while. And then it went under because it didn't have a sustaining value. And then the government started to give long-term visas, golden visas for foreigners to reside longer in the
Yeah.
UAE, and then the property market just took on a sustaining hold. And then every time there's a problem somewhere, Kashmir or the Ukraine war, Dubai has become a safe haven for many of these hotspots around the world. So every time there's a hotspot in the neighborhood, Syria, just most recently, you would see the property market go up because the Syrians will all flee to Dubai and invest
Russians
in
and the
property
Ukrainians, you
and
said as
start.
well. The Russians and the
Right.
Ukrainians.
And Russians and Ukrainians finding their way to Dubai to live. And I'm at the airport and I look at the destination that flights from Dubai goes to. It's both to Russia and to Ukraine, and so it maintains that neutrality and benefits from it because it becomes a investment of last resort for many of these countries. And in the same way in Africa, countries like Botswana and Ghana, because of long, and even Namibia, these are countries which have had sufficiently long periods of peace and stability that their property market starts to kick in, and it becomes possible to build a middle class, and then from there wealth and so on. So then we talk about new asset classes like crypto. Um, I hold crypto myself, and the reason I think that crypto is a long-term sustainable asset class is because I have a theory in my book that we are now entering the network society. And so we need to pay attention to what networks of new investors are saying to each other to see what will sustain and become a viable asset class into the future. And I've made that decision that this network society that is coming about globally is a real thing. It's that people are finding value in transacting with each other directly without financial intermediaries involved. Through digital assets and cryptocurrencies, and that's become an asset class of its own. So that's the broad range of how I assess what's happening globally. And my assessments come from my experience in the banking industry. So by looking under the hood and seeing how the industry actually works, I make my geopolitical assessments of what's sustainable in terms of wealth creation, in terms of payments, remittances, economic growth, all of that front. So that's where I come from.
Okay, so I'm interested in what you said. The network society. That's an interesting term. What's the name of your book, by the way?
It's called The Great Transition. The personalization of finance is here.
Okay, the
And
great
it's meant for
transition.
people in the banking industry, but I promise you the first four chapters anyone can read and understand because I try to keep it as simple as possible. And so what I'm saying in the book is that a lot of work has been done on the platform economy since the inception of the internet, in 1984 or thereabouts. And then, the platform players, when Tim Berners-Lee, found the formula for HTTP.
World Wide
Um,
Web, yeah.
he he just the World Wide Web, and he created that platform on which all of the huge companies now sit. But the essence of the platform economy is to onboard everybody and then to monetize them. But an alternative model is evolving, which is personalization. So it's taking us in a different direction where because of blockchain and crypto and non-fungible assets, the ability to own your own assets, in your own custody, is becoming a reality. And so that takes us in a different direction where individuals are able to manage their own assets and so on. So so I'm trying to make the case that actually we are moving towards personalization, and it's going to change the way in which we think about wealth and our control over our financial destiny in that way.
Can you explain what you mean by personalization to the layperson? What
Um, Yeah, so today when we do a financial transaction, we need a financial intermediary. You make a payment to someone else, you need to send it through a banking system.
Swift or
And through crypto, you don't need a banking system. You and I can send money to each other directly. We don't even need some of the crypto intermediaries that exist. If I gave you the code to my crypto asset, I can actually transfer it to you directly. So just this simple concept alone calls into question the role of financial intermediaries. Why do they exist in the first place? And that's for just basically transactions. But within the transaction are the assets that we hold. So if you take a crypto, for example, what gives a Bitcoin the value that it has? It is basically the perception of everyone in that network. That particular piece of digital asset has a value. What people don't realize is gold also operated on the same principle, except that the network effect wasn't very obvious. The network effect was global. It was trading on the physical asset, and it depended a lot on where that asset sat. If it sat with you, then it belongs to you. And if you had more gold than someone else, and someone needed that gold, then the price of that gold goes up. So it's all based on perception. And crypto today is also called digital gold, which is a digital version of gold, and that's because it's got the same amount of immutable quality about it. You can't argue that it doesn't exist. You can't argue that it is not located in any one location. That's the real value of gold. And there was this other element about gold, which is that it's a scarce resource. Except that today, theoretically, you can mine gold out of a passing asteroid, and you'll have all
Yeah.
the gold you want, and it will screw up your valuations. But crypto is by design, or rather Bitcoin at least, by design is a finite asset class. So that alone protects its value and stuff like that. So
Yeah.
so by the nature of the way in which crypto has been designed, and the way in which we own it, we have greater control as individuals. So what I do in my book is I then talk to banks and financial institutions and say, you need to rethink what your purpose is in a transaction between two individuals. And now with AI, that's going to go even more, strongly, because you and I will have just the same information as any institution. So in the old days, a trader or a fund manager would have a lot more information about the value of an asset than you and I would. But because you and I have access to that same amount of information, and we belong to communities, there have been many instances where, like meme stocks, for example, are actually driven by sentiments of thousands, if not millions, of investors talking to each other, and nothing to do with the institutions themselves. And sometimes they're so powerful that they can bring down a Goldman Sachs if they wanted to. They did
GameStop.
bring down.
Yeah.
Yeah,
Yeah.
GameStop was one of them, right? They push back on the institutional investors, and that's only the starting point of the personalization process. The personalization process continues in that with AI being located on the devices that we have, whether it's a mobile phone. And in fact, I also say that the days of the mobile phone are numbered because a lot of our relationships are based on the fact that we do a lot of transactions out of the mobile phone. But a lot of the transactions might be done autonomously, through APIs that sit in the devices that are all around us. Even our car, our vehicle, the oven, the refrigerator,
Yeah.
all of this will be transacting autonomously on our behalf. And therefore, we don't need the intermediaries that we have today. So that gives us a lot of personalized control over what we want to achieve as individuals. And that changes a lot of things about how society is run, how financial intermediation is run, and where the value will sit in a transaction.
Yeah.
So there's in that sense, it's everything, and that movie. Everything, everywhere, all at once. It's actually as good as that.
Yeah, I guess most people don't know these changes are happening until they've happened. But getting back to crypto, it's still quite volatile, and what worries people is the volatility and the fact that there's 12,000 cryptocurrencies. There's Bitcoin is up and down. It's 90,000 one day, it's 100,000 the next, and you've got a difference of opinion. In people like Warren Buffett are saying people are just buying crypto, hoping that it will go up in value so they can sell it to some other sucker. And other institutions like hedge funds are holding crypto, and the governments are holding crypto. So I think that's what worries people about crypto. They don't quite understand it, the blockchain. If you lose your key, that's it. You've lost your money, and these sorts of things. So that I think that does bother people. But you think it's here to stay, right? You think
Yeah, so
some
Warren
of them are
Buffett
here
is
to stay.
absolutely right in what he says, in that there is no underlying value. It's not based on any income being generated at the back end. But the thing is that so the same rules apply to gold. When you think
True.
about how gold in human civilization has you know, come to enjoy the immutable value that it has, it defies logic. You know, why did we even you know, put the trust in gold, in physical gold, in the way that we do? So I agree with Warren Buffett in everything he said and Charlie Munger. And then you project it out from there. And that is that um, we do need a token of value for the digital age. When the young generation are spending 70% or more of their time online, and a lot of their transactions, their life, their daily life, their gaming is based on doing
Yes.
things online, you absolutely need an online token of value. You know, and the movement of digital money, you know, from traditional banks is only a starting point. So when money becomes digital, you know, it has a way of functioning, but it also needs to be tokenized. The actual money needs to be running in the network. So the need for tokenized asset is very, very real today, and our young people understand it more than, you know, those of us who can, you know, dig into our pockets and look for the cash, and they just can't do 70% of their waking hours activities if they didn't have a digital token. And then the question is, how should that token be valued? I absolutely agree that a lot of valuations in non-fungible assets and in crypto is actually a Ponzi scheme. You know, let's call it that. Okay, but so is investments in startups, you know, in innovation today. The way in which the startup investment ecosystem works, it's a Ponzi scheme. You know, you have your mom and pop who gives you money as a seed startup, and then it goes up to Series A, Series B, Series C. That's selling it up to a greater fool, right? So, and a lot of society today works on what used to be even illegal. You know, in that you're actually offloading your asset to a greater fool, and you're hoping that at some point that asset will justify itself and find a valuation that's based on real income. But because of that approach, the platform economy has become a reality. You know, a lot of the platform players don't make money, and in fact, even Amazon, Microsoft, Google didn't make money for, you know, a
Yeah.
long
10
period of their
years and
starting
years. Yeah.
point.
Yeah.
Because the theory was, let's wait till we populate our platforms, and then the money starts coming in. And now it's you know, it's cruel because they are having populated the platforms. They rake in a lot of money by forcing you to pay them for you know, for the transactions that you do. You know, and that's why I'm saying that the technology is now evolving such that we can all eventually move out of those platforms. We are in the early days of that, but you know, we need to understand the platform economy for what it is.
Yeah.
The whole idea is to onboard and then monetize, and I think a lot about that for financial services, because financial services has a habit of trying to do what the platform economy has done, and then give it good names, but actually what they're doing is no different from what Amazon or Microsoft does. You know, so the financial services industry uses phrases like financial inclusion. We want to bring finance to as many people as possible, to reach out to the unbanked. The truth is, they are operating on the principle of the platform economy, which is to onboard everybody on and then to monetize them. So the idea is to benefit, or rather to profit from poor people as it is with rich people.
Yeah.
And then when I look at the more recent economic reports from poor countries like India or Bangladesh and Nigeria, this onboarding starts to create an indebted community which cannot afford the indebtedness in the way that rich people can, or educated people can. So that's where we are right now, in that the platform economy is becoming very difficult to sustain, because it's exploitative in that way.
Yeah.
And then the question is, how much of the new technologies that are coming on can give us control over our own transactions, and take us away from being exploited. Now, the thing about the effect the Ponzi scheme, as it were, the Ponzi economy that we have created, is that, number one, it's got its own validity, its own acceptance, that the people in this industry accept that that's how they're going to create the future. That's how that new companies are going to come into being, and eventually be monetized. But you just need to keep selling it to the greater fool.
Yeah.
And that's actually what's also happening with Bitcoin. In fact, this week, Bitcoin just slumped from 100,000 to now it's 79. I think it's sitting at about that. And I won't be surprised if it goes down even further before it rides the next wave, and then finds its valuation again. But when an asset fluctuates so dramatically, it it doesn't fulfill its function as a safe haven, right?
Yes.
And it's not a stable asset to be invested in. But then we have to think about what will make it stable, what will make it a more predictable asset class. To some extent, we've seen it move alongside equities. Um,
Yes.
but the equity market itself, and it's a very complex conversation to have, because the equities market actually is broken today, worldwide, in many parts of the world. Um, when you take the US equity market, for example, only the Magnificent Seven
Yes. Yeah.
do well, right? The rest of the equity market has not seen growth about 8%, or
No.
much smaller than that, year on year. In other words, you can be running a very good manufacturing business in the US. The market is not rewarding you. The market is rewarding the Magnificent Seven, to realms that they unseen before in human history,
Yeah.
right? So then the question is, when you want to raise an IPO, and you're in a business that is not one of the fashionable businesses like AI and so on,
Yeah.
how do you raise capital? So it's broken, and it's even more broken in smaller economies. So um, the the world is in a transition, and that's why the title of my book is The Great Transition. It's a great transition underway right now, where we have we have embraced the Ponzi approach to valuation creation. We are on our way to a new stable format, but we don't know what it looks like yet. And then we need to look at the elements that causes an economy to be stable. The trade-off between inflation, productivity, and
A peaceful place where there's not wars going on, and
geography of
yeah,
a population,
yeah.
and so on. Yeah, you know. So we need to understand the mechanics by which it operates, and then start making a judgment call of what works and what doesn't. So what I'm saying is that the Ponzi approach has been legitimized for a number of different industries. So while it is not wrong that it is not untrue that Bitcoin is actually a Ponzi scheme. Uh, the Ponzi approach is the operating mantra of the network world at the moment. The network world feeds on itself to give a valuation that otherwise doesn't exist.
Yeah.
But that process is so unstable at the moment. Then we ask, when we get to the other side, what will it look like?
Yeah.
So those are the things, those are the questions that I deal with. And I deal with them because we all have decisions to make. So what do we invest in? What do we consider to be stable? And what will create the, off the charts asset classes that we'll be quite foolish not to, to benefit from them when it happens, right?
Yeah.
So we need to, diversification is definitely a very important element. A lot of our assets should be in an area that we understand. So property is definitely an asset class that we need to be properly invested in. But even then, what's interesting is I I have friends when I was younger who would never buy a holiday property because there's no upside value on holiday property.
Yeah.
But with a greater, today when I travel around the world, hotel rates have gone up. I see tourism has like off the roof in many countries.
Yeah.
People are traveling like never before, and
Yeah.
suddenly the whole idea of leisure properties have taken a life of their own. So, and it wasn't true 20 years ago, 10 years ago.
No.
Yeah. So we're seeing that transition taking place with greater leisure, lifestyles and asset classes that were not properly valued before are finding a greater stability and so on. And then there are new asset classes. So we need to be invested in things that we understand, and then be experimenting with things that we don't understand. That are still asset classes that are under that are still being built.
Yeah. I think you're right about diversification. I mean, someone like Ray Dalio invests a lot of money in his funds in China, but I think for most people, their investment are their pension scheme, their tax-free ISA or IRA, and that usually goes into a managed fund or an index type of fund. So it's back into the stock market. And then they might buy a property or a second property. So for the average person, and then some people, the younger people are looking at things like crypto, maybe gold, and that sort of thing. But they're perhaps not so aware as to where to put money into Bitcoin, Ethereum. Where do they start? How do they even get on these platforms? So, but for the average person, that it's back to that
So
stock
something that we
market.
need to
Yeah.
Right. So something that we need to start factoring into our thinking when it comes to assets, financial assets, and long-term, investments, is that we're entering a phase where it's possible to become rich very quickly. If you're invested in a ephemeral asset class, it's almost like gambling, but uh, but it's actually tied very strongly to the network economy that we have. So you do need to be, maybe 20% of your assets should be in new age asset classes, and then just experiment around because we're now entering the age, especially with AI. They're now calling it the one-man billion-dollar company. Okay, so what it means is it's possible for one person working alone, just operating a number of APIs to create a billion-dollar company.
Wow.
Theoretically.
Yeah.
The numbers have fallen from 10,000 to 2,000 to 1,000. You don't need an army of programmers in your company anymore. You need a number of very competent programmers, and then all of them working with AI to do programming. And a lot of business analysts are able to do their own applications on their own. So the days
Wow.
of having a huge IT team is gone, right? So that already shrinks the company down. And then you need a company that can sell. And today with bots, you can actually sell to hundreds of people all at the same time, and you create a churn in your business model. So when we think that this is what's happening to corporations, what do you think will happen to asset classes? That we would be able to accidentally walk into an asset class that is suddenly in need and suddenly very successful, and it makes all the wealth that we need for the rest of our lives without even thinking about it, and we might have missed it. And the traditional assets that we are invested in, whether it's property or stocks in blue chips, um, they may not even keep up with inflation.
No, correct.
They are run of the mill in that way. So we really need to be invested in both ends. The things that we understand and the things that we don't.
I guess so. It's about doing your research and not investing any amounts of money that you cannot afford to lose when you're investing in some of these new assets. I agree with you there. I mean, you're in China right now, and obviously things are moving very fast there. You see videos of cars where you get out the back of the car, this drone appears, and you get like a little helicopter. And people who go to China tell me it's like they just can't believe it. I mean, their growth is like over 5% a year. In the UK, they said we've grown, but by 0.01%. It's a barely breathing. It's barely. It needs resuscitation in the UK, and Europe is slowing down. Germany's slowing down. But when I go to Asia and places like Malaysia, Singapore, it seems to be a buzz there. There's optimism that the growth is unbelievable, and things are moving so fast. Healthcare, all these things are moving much faster than in Europe. Maybe that's why you're in Asia now and in places like Dubai, because that's where the growth is.
Yeah, so my own future, I'm investing a lot in Africa right now.
Yeah,
I think Africa is the next phase of growth. China, at its height, was growing at even as high as 12% GDP growth a year. And then I was here when that was happening, and I'm still here. So it went from 12, and then 10, and then 8, then 6, 5%. China now does not have enough growth to pay its own debt. It's accumulated a lot of debt, whereas it built this physical infrastructure, and rightfully so. That's a very good use of a country's resources to build physical infrastructure when it can. But its rate of growth has slowed down dramatically, and it's now preparing for a phase where its population will also go into decrease. So the dynamics of it will change. But it's a very responsible country. It keeps thinking about policies that it can work on. There are many things that China does that the West doesn't understand, like when the government was clamping down on private enterprise. The reason they really thought that they had to do it. Now, nobody has a right answer to this. Was because the Gini coefficient had gone off, the scales, in that the rich were really getting richer and the poor were, being
yeah.
left behind. So they were trying to put in programs that tries to rein it in. So it's a highly controlled society, and you may
Yeah,
disagree with a lot of things that they do, but they've been doing it not out of a knee-jerk reaction. They have a sense of purpose.
they think long
Whether they
term.
succeed,
Yeah,
whether they succeed is another story. But in terms of growth and opportunity, it's always good to go to a country or a society where they don't have as much built up social and physical infrastructure. That gives them the leeway to absorb new technologies, move faster than everybody else, and take it on. I'm also learning that having a critical mass of population helps. So one of the reasons East Asia has been growing fastest is because the largest populations are in this part of the world. Japan has 120 million people, China 1.5 billion, Vietnam 100 million people. So you
Indonesia.
you need
Yeah,
populations of
yeah,
that size to create a domestic economy. And because of technology, because of liberalization, anyone who's an entrepreneur, as long as you've got a good idea, you can go to market very quickly. And the legislations tend to follow the innovations. So, they give it time for it to grow. Whereas in Europe, the legislation, predates the innovation. So they even, try to control it. So that slows things down a lot. So I think that's where the differences are. Um, but it depends on what the trade-off is. If you're happy to live in a society where, education and healthcare is highly subsidized or paid for through a socialist system, that's good too. Because in countries where the Gini coefficient is bad, if you don't have your personal wealth, you will suffer in some of these fast-growing countries that you won't be able to afford healthcare
Yes.
and I mean good healthcare and so on. So there's always a trade-off. And then you make a decision from there. But the things that shouldn't be acceptable is where you pay high taxes and you don't see the benefit of that in your local community. I think that's where in any society, it's for the people to draw a line and say, no, we need to bring that back. That whatever investments we put in, does result in the benefit that we're trying to create. And I think
Yeah.
that's actually where I find a number of Western societies are losing their way. And I wonder what it'll take to bring it back.
Yeah, the governments have got so huge that I think in the UK, half the people in the country are employed directly or indirectly just from the government. So a lot of the money, people are paying roughly more than half their income in real terms in tax, and they don't always see the benefit for it. So there's a lot of problems. And you mentioned Ponzi schemes. I mean, the pension scheme, the state pension scheme is a Ponzi because they I've got a state pension, but there's no new. It's reliant on taxpayers paying in new money to pay me, and there's no fund there with my name on it. It's just in there, these funds were these schemes were invented in the 1940s when people didn't live much beyond 65, and now it's totally changed. People are here are living to 80. I know a guy, he's 95. He's been drawing his pension longer than he paid into it, longer than he worked, and that doesn't add up. When we started off paying into his pension in the 60s, he was paying pennies in, and now he's drawing out, thousands of pounds. It just doesn't add up. So there's a lot of problems in Western economies that the new economies don't have. They don't have a benefit system. Asylum seekers come here, they put in a hotel, and this sort of thing, but they don't have that in these Asian
Yeah.
countries.
Actually, I come from Singapore, and both Singapore and Malaysia were former British colonies.
Yes.
And in the last days of the colony before they became independent, I think the UK had a Labour government most of the time, and it very quickly put in place a number of schemes that they couldn't implement in the UK at that time. So the Central Provident Fund, for example, in Singapore and Malaysia, are actually creations of the UK government.
Okay.
While we were still colonies, and then um, we built on them. We enabled an entire population to build their own pensions through the Central Provident Fund.
Okay.
In the case of Singapore, more than in Malaysia, we also made the people responsible. So, in creating healthcare, for example, Singapore has a co-pay program, which for all your healthcare needs, you need to co-pay because based on the premise that when you co-pay, you would be much more responsible
Yes, it's true.
for your healthcare. And the funny thing about NHS is that uh, every time I speak to my UK friends, they defend it to the hilt and say it's the most beautiful program. But the number of management consultants that I've met who've been doing work for the NHS, and many of them are retired people who used to work in out in the world, right, in Singapore, Malaysia, and so on, UK British consultants going back to the UK and getting jobs as management consultants for the NHS in specific locations to try and incrementally solve a small productivity problem that doesn't get solved
Yeah.
anyway.
Yeah.
And it becomes an out of pocket for the NHS scheme, unintended out of pocket.
Yeah.
So
Huge
the
wastage.
program is not, the program is not ossified not only because of the nature of the program, but in trying to resolve it is actually spending more, good money after bad.
Correct.
So yeah.
It's not
So I
perfect.
mean, in Asia we've learned from the West, and then we protect the intent of the programs and then build on them. I think we're doing well in that front, and I think that Singapore does have one of the world's best um, uh, public health system, which is of the same quality as the private health system. So in Singapore, if you go to a private hospital or a state hospital, it really doesn't matter because both are
Right.
of the same quality, and you have access to your same pension funds to pay for that, and the government keeps the cost of healthcare manageable just by this simple co-pay program.
Amazing.
That no matter how rich or poor you are, you have to pay into it in order to understand what's necessary and what's not, that sort of thing.
Yeah. Open amazement.
Yeah, yeah, we can discuss all of these, but finding the sustainable, governance structure for society is the single biggest, issue that many societies are facing
Yeah.
everywhere in the world. It's not just the West.
And I think you're right about that. Singapore and Malaysia have done amazingly. And Malaysia, I think, was given independence the same year as Ghana. And you look at the difference in those economies. And Singapore didn't have any much of natural resources, and look how they've grown. But you mentioned Africa, that it's probably the last frontier in terms of huge growth opportunities. But it's still, in some parts, it's still the Wild West. So you've got Rwanda now. I mean, we were going to send refugees to Rwanda. Now they're invading another country, and this sort of thing. So it's still a bit, and you hear every government coups and corruption and that sort of thing. So how does one start to think about investing in a country where there is so much difficulty, so much corruption, and you can easily just get ripped off? And where do you
Yeah,
start?
well, I think the narrative that you hear in the West sometimes are off the mark in terms of the actual narrative of what's going on the ground. Um, you know, and I've seen, I mean, the biggest false narrative is the narrative that you see in the West about China, right? And just because you label it as communist, everything it does is not right. And then when you actually understand how the country works, it has a very self-perpetuating and self-fulfilling social governance structure, which builds on itself, and you don't see that in the West. You don't
Right.
understand that there's a great degree of accountability in Chinese governance structure that is not replicated in open democracies. Open democracies, the real battle is between ideas. Whereas the daily life of a community, the real battle is in the governance structure, that anyone put in a position of responsibility is ultimately accountable to either the society or within the structure itself.
Right.
And those things don't get articulated very well in the West, because in the West it's always headline: Are you a democracy or not? But what is a
Yeah.
real democracy and what is the real level of accountability? So I've been to Rwanda, and honestly, for a country where the per capita GDP is only $700, it's one of the most middle class countries I've seen,
Right.
in Africa. And the streets are well run, well lit. people actually stop, drivers actually stop at the zebra crossing. That's, by the way, how I measure a country's social structure.
Not like
And then
Vietnam.
at the other extreme, you
Yeah.
have the leadership, still fighting guerrilla warfares with their neighbors, with Uganda, and so on. So the thing is that there are two or three contradictory issues that every state faces, and we need to, to separate them out in order to understand what's happening. There are lots of things happening in China and
Mm.
its relationship with all its neighbors, which is nothing to do with the governance structure in the country. So there are two different topics,
Yeah.
actually. And Rwanda, to be honest, given what they've gone through in the 1980s, the genocide and all that,
Yeah. Yeah.
and what they are today, it's an incredible development. But the guerrilla leader of the 1980s is also the leader of the country, and right now, so there's still that embattled mindset with which they govern, and he's done things which, from a governance point, shows up the
Mhm.
darker side of him, right? So the thing is that how do we separate what's being done to create a more stable society with the way in which they are perceived out in the West. I've been to and I've got lots of good friends in El Salvador. And when the current president came into power, all the media in the West was about how many people he puts in jail. But it was true that before he did that, the murder rate in El Salvador was totally unsustainable. And then the murder rate went into the jail, into the prison. So you got journalists who go into the prisons and say, look, the prisoners are not being treated properly, and there's a lot of chaos and all of that. So I mean, you need to give time for a leader to, to sort of build all the structures
Yes.
you need to have in place. Singapore, for example, something that the economist likes to say is that Singapore is not a democracy. And yet, Lee Kuan Yew took great pride in running an election every 5 years. And every 5 years, at least 30, if not 40% of the population actively votes against the government. The fact that 60% votes for the state and then the ruling party keeps its position does not invalidate the fact that it's a real democracy.
Yeah.
So and there is a process in that, right? So and the way in which Lee Kuan Yew ruled Singapore, the subsequent leaders can't rule in the same way because the expectations have risen, the level of self-confidence has gone up, and the sense of personal liberties are very strong in Singapore.
Yes. Yeah.
So when you try to tarnish all of that with a brush of the pen and say, it's not a democracy, or it's there are things that are wrong about a society, you actually miss the opportunity to participate in the good parts of the economy. And I think that's what we need to bear in mind, especially in the West, because the media portrays the rest of the world in two-dimensional perspectives. It's not two-dimensional. It's a lot deeper than that. And there are countries, Namibia, for example, or Botswana. Just give them 10, 20 years of stability, and the GDP grows incredibly. Angola, no reason for it to be a functioning state, but today one of the richest countries in that part of Africa.
Really. With a
And
war only
just
a few
by
years ago. Yeah.
that's right. So when you take the war out and they've settled that, it creates an unprecedented period of wealth creation. Um, I have a theory which I'm working on for my next book. I call it the rise of the competent state. Um, there was a time when during Reagan's period where the whole idea was the state was the problem. You need to have less state and so on.
Yes. Yeah.
And then in many of the developing countries, the state was the problem. It was corrupt and so on. And something very interesting happened during COVID. The state discovered that it was able to manage COVID. So I went to really poor countries like Burundi, for example, one of the poorest country right next to Rwanda. And the way in which they were managing COVID was incredible. Firstly, they made lots of money from the tourists coming in or the foreigners coming in because every foreigner had to pay, $100 to get a COVID test. Secondly, they had all these apps in place, and thirdly, they had a quick response system where if there's a breakout, they knew what to do and stuff like that. And just that COVID experience gave many otherwise impoverished states the confidence that they could get things done. And I see that being built on right now. That they're building their bridges, they are building their schools, their highways, their airports. A lot of it actually being helped by countries like China. And that's another discussion in itself, which
Yeah.
is, is China getting them into debt? So the West sees that as getting them into debt. But if you were in Tanzania, for example, or Namibia, a friend of mine who works for the UN said, the locals wake up at 7 o'clock. The Chinese are working on the railway. They go to sleep at 7 p.m. They go home at 7 p.m. The Chinese workers are still working on the railway. And then 18 months later, they actually have a railway, a working railway system that gets goods from
Yeah.
the city
Incredible.
to the port. So what is it that you wanted? You wanted a railway that works.
Yeah.
And then
Like the
you
British
get
used to do. They used
countries.
to build railways in Africa.
Yeah, and the British used to do that, right? And I mean, mostly to extract, natural resources. But at least the railway got built, and the locals didn't build on it, didn't then take it to the next
Yes.
level.
Yeah. They just
You
let it
know,
go into
so
decline.
yeah, I think that the UK is being blamed and burnished for a lot of things in the colonial period for which it shouldn't be, because I think that it is what it is. Colonialism was what it was. It's really now a question of which of these countries are able to take it from there to the next level. So what we did in Singapore was to leave all the structures, the social and the physical infrastructure that the British had built. Even the Navy ports were turned into commercial shipbuilding companies and so on, and then take it to another level, which is to create a sustainable society. I'm not a fan of a lot of the repercussions that you hear nowadays, that oh, the UK robbed us, destroyed our economy and stuff like that.
And they want
I'm not a fan of
reparations. They
that.
want billions in reparations. Yeah.
And then they want billions in reparations. I mean, India, for example, talks about that, but it was the result of the industrial revolution that a smaller population of women working on the treadmills could generate a lot more cotton than, or rather textile than thousands or millions of women working their old traditional ways.
Yes.
So in India is going through the same difficulty right now, because since the Y2K problem, India has been the world's largest exporter of talent in IT.
Yes.
And now with AI, a lot of the talent becomes redundant. And they have to redefine themselves, and they have no one to blame but themselves. But if they don't move fast enough on that, so
Yes.
so I think that it's popular to talk about what the colonialists did in their time. But if you take stock of what you actually have as a result and then work on it, I think that's a lot more productive thing to do.
I agree.
And so I
I agree.
look out for countries that have made that transition well.
Okay. So there's a lot we've talked about, and I think we'll probably need to wrap it up soon. But you covered so much things. It's been great. The one thing that I think people are worried the average person is worried about AI is that will it take my job? What are we going to do in the future when AI takes over legal jobs and accountancies and all this sort of thing? So people are worried. I guess they need to retrain and just adapt to the new economy. So I don't know what your thoughts are that. And finally, I'd say 10,000 millionaires left the UK, not just millionaires, but very wealthy millionaires, but multi-millionaires have left the UK in the last year, many going to countries like Dubai. Where would you, if you were a young man now, or you had a son and you said, son, go to this place and make your fortune, which part of the world would you suggest?
Uh, a very good question. I don't have children, but I have a lot of god kids. And I do things like give them money to start their first investment account so that
Nice.
they can learn what to
Yeah.
do,
Yeah,
stuff
good.
like that. Yeah, and I observe what they do too, because where they get information is now amazing. Like, they just need to plug into the internet
Yeah.
and they get a lot of insights. I think that the first thing is we do have a lot of different options. We are all globally mobile today. It is possible to grow up in a certain community and then uproot and go off and live somewhere else uh, just because you want to. So, like for example, in my case, I'm open to the idea of living in a small village in China just to practice my Chinese, and I will be very comfortable, and I will still be accessible to the rest of the world. Like I still can fly back to my home country,
Yes.
and so on. So we are all very mobile. So the options open to us are much wider than ever before. And they'll become even wider because the cost of traveling, the cost of living somewhere else is going to expand even more dramatically. And then with a longer life, we don't all need to live in the same place all the time. So at different phases in our lives, we can move to different communities to express ourselves, our own individuality in those communities. So if you're young, you'd want to live in a place like Hong Kong, which is a little bit more freewheeling and has a great nightlife. And then when you're a little older and you have kids, you move to Singapore, where it's safer to let your kids roam around, a lot of parks, and good schools and stuff. And then when you're older, you move to Malaysia or a cheaper country like Indonesia. Bali, for example, has become an incredible location for freelancers. And you've got a
Yeah.
young community of freelancers, all networked with each other,
Because you can work
and
from
that
anywhere in the
network
world. Yeah.
effect,
Yeah.
and you're still connected to the rest of the world,
Yeah.
and you have a great lifestyle where you go out to the beach and go surfing every day, and then go
Yeah.
off and do
Yeah.
your
Why not?
your
Yeah.
programming work. So the options are incredible, and we don't need to be stymied by our perception of what is stability. And I think that that's what the people who are trying to influence our narrative are trying to say to us, that somewhere is better than where we are. And it's actually a question of what is it that we want for ourselves. And there are lots of options out there in the world.
Yeah.
Even in France, it's a large enough country where I've noticed that you can live out in the villages, or you can
Yes.
live in Paris, and they're all very different lifestyles in a way. So I think that it's our thinking that needs to change, and our resolve in terms of what it is that we want to achieve. And we are able to be ambitious well into our 60s today. And that's what gives us the choices that we want to have. And we shouldn't be thinking about that somewhere is worse off than we are where we are. I don't think that's fair. And the person it's not fair most to is ourselves, because we are taking narratives provided to us by the newspapers to define who we are. I'm sorry, but I,
True.
I
True.
I don't see that.
You're right, because if you just read the newspapers, I mean, they consider China and Russia to be the biggest threat to the UK. So that's a very negative way of looking at things. But I think you're right. There's a big world out there. We've got these now, and you can start a business on this. You can work from anywhere in the world. So yeah, I think I get the optimism from you that you're optimistic rather than pessimistic about the world. So we've got to embrace this technology and move forward. I'm certainly thinking of relocation. I'm thinking about countries like Malaysia, because it offers a better cost of living for me, sunshine, and I like that part of the world. I like to move around. It's very easy to get around. So yeah, I definitely want to read your book. So send me a link to that. I'll put it out to the
Yeah.
audience so that people can look at your book. It sounds fascinating. And they say a lot of economists can only tell you what's happened in the past. You're looking to the future and trying to tell us what's happening in the future. So very, very, I'd love to have you back on again to further the conversation. But it's been really interesting talking to you. And if I'm in Singapore or Malaysia, I'd love to get together with you. So
Yeah,
um,
let's do that, Charles.
yeah,
I'd love to do that, and shoot the breeze a little bit, but at the same time, construct our ideas of what the world really is, and what you just said about China and Russia. I have friends in Russia who are IT people building apps, and as ambitious as anyone in Silicon Valley. So then how do you place them if you've been taught to hate Russia, for example, and the way I educate myself is I make a distinction between the things that I can control and the things that I cannot control. And the
right.
things that I cannot control, I don't need to have an opinion on them.
Yeah, you
You
can't
know,
worry about that.
um, so like global geopolitics, the U.S., China, I can't control that, so I don't need to have an opinion on that. But what I really want to do in China, what I really want to do in the US, I can control that, right? So that defines my view of the world.
Fantastic, fantastic. Well, Emmanuel, it's been so interesting talking to you, and I'm sure I'd love to talk to you again. But I think we've talked for over an hour now, so I think we'll probably let you get on. You've just got into Beijing, so you probably need your rest. It's evening now. Enjoy your evening and your meal, and hopefully we'll talk again. Thank you very much for being on this podcast. It's been really great.
Thanks, Charles. Thanks for having me on.
Thank you.